Options Trading 101. So let's take a look at this chart. And by the way, you may have heard that trading is all about probabilities, and that is true, meaning you need an edge on your side. What's interesting, though, is you hear a lot of people complain about indicators and say, well, there's no such thing as a leading indicator. The problem with that underlying statement is that it assumes that trading is about predicting the future. Therefore, you are looking for some kind of leading indicator to tell you what's going to happen in the future, and there actually is no such thing. But the truth of trading is that it's not about predicting the future. It is because nobody knows the future. So it's about just creating statistical probability scenarios and then using money management, risk management to manage those situations. However, there are certain things we can use that will give us probability scenarios for direction and for timing. And it's very important that you use those to, again, even though you don't know the future, it'll put the odds on your side. So one of those would be my cycle indicator, which I give away for free. Modification of a standard indicator. You can get it there at indicatorwebinar.com. So that's free to every viewer of this video. And then other things would be another aspect of that, though, is I prefer to trade options. That's why this is called Options Trading 101, than to just buy the stock. So here we're looking at Amazon. And I could buy Amazon, but I've got a problem. I've got two ways of not making money, and I only have one way of making money. Well, wait, what do you mean by that? Barry, isn't the market could either go up or it could go down, right? And so don't have a 50-50 chance. No, you do not have a 50-50 chance. The market could also just go sideways for a while and consolidate. So you only have a one out of three ways of making money. And that's not good odds. We're talking about statistics, probabilities. Those are not good odds. I don't want a 1 out of 3 way of making money. Okay, and again, this is just pure stats aside from any other indicators or things that we may be using, which we will use. So that's no bueno. We don't want that. We don't like that. So this is where I bring in options, because with options, I can flip that around. And let me show you what I mean. So now I'm going to sell options instead of buying them, because I know that the vast majority of people lose money trading. You probably know that as well. So what if we were on the other side of the vast majority of people? So most people think, well, the way to do that is to trade the opposite side of the trade of them. But no, really the better way to do that is to just sell them the trade. So if they're going to buy calls, let's say they're buying the options, and if you buy a call, you think the market's going to go up. If you buy a put, you think the market's going to go down. And so instead of buying a call or a put, we sell them. They've got to buy it from somebody, so they might as well buy it from us. And so good. I'll be the seller instead of the buyer. So now, remember, the buyer only has 1 out of 3 ways of making money. And let's put on top of that, the buyer usually loses money. So if I'm the seller, well, right away, even without being a technical analysis genius with the capital J, I can put the odds on my side. So, okay, let's say that I decide I've got my little timing indicator here, my cycle indicator, market timing entry indicator, and I say, okay, we've got a cycle low here. So I'm seeing that the market's going to go up. Okay, high probability. I don't know that, but I have a high probability with my cycle indicator that tells me, okay, yeah, market is probably going to go up. Why? Because we're in a cycle low territory. So I'm looking for, now we've got a up cycle. And so what do? I'm going to sell the puts. And the people who buy the puts, they think the market's going to go down. When they buy puts, that means they're bearish. So right away, boom, I'm in the money. I'm good. I'm golden. And by the way, when I sell them that money, I get the money in my account right away today, this minute. As soon as I sell it, money's in my account. Unlike when you're buying, money goes out of your account and it doesn't come in your account unless and until you actually are correct on the trade. So as a seller, I get the money right now. Just like if somebody buys a car from you, they give you the money right now. And so that money's in my account immediately the same minute. So that's cool. I got money. All right, now here's the great thing. Okay, so far so good. And then if the market continues to go, but wait a minute, comes down, no bueno. Okay, now over time, what happened? Well, a couple things happened. Number one, we had our cycle low. That's the good time to go ahead and sell the puts to the people who are bearish. And it goes up. So I'm golden. But then we get put in a cycle high. and now it comes down. Okay, so now we are in this zone right around where I went ahead and sold the puts. So am I still making money? Well, the answer is yes, I am. So we have at this juncture now a sideways market in the sense that it's back where it initially was when we sold the put. But remember, I got the money. And the person who bought the put, they had to pay money. So even if it's even, well, they're still out the money that they paid. And so they're not even. Remember, in a sideways market, the buyer is still not a winner. The seller is, all right? And then if it keeps going down, then it pops back up. Keeps going down. Now, this is the other thing, is I will still make money if I sold it here. Even if it goes down a bit, I can still be in profit because the person who bought the opposite side of my trade, the put that I sold them, they're not in profit until they cover the cost that they had to pay to buy the put, right? They got to cover that before they get into a net profit. And so now, in short, I have 2.5 ways of making money. The market can go up, it can go against the buyer, it can go sideways, or it can go even a little bit down. It can go a little bit in their favor, and I still make money and they don't. So now I have, 2.5 ways of making money, and they only have a half a way of making money. So it's not even 1 out of 3 now. It's only 1/2 a way. Okay, does that make sense? Those are the nuances of option trading and why selling options gives a much higher win-loss ratio than buying options. And this is an income strategy that it's really not that complicated, but you do want to learn it before you try it. Get into the details before you try doing this. There are nuances to this for sure. And managing your risk-reward ratio is absolutely critical, because the win-loss ratio is fantastic. The risk-reward ratio is not favorable, but what we do with that is we only trade options, vertical spreads. By the way, I always use a spread. And so I am always making sure that I know that my risk-reward ratio is within the certain parameters that I set in my money management system. Absolutely critical. And timing. The other thing with this too is, I'll just throw this in for extra bonus points for you, is that when I'm selling options expire. They have an expiration date. And the closer it gets to expiration date, the cheaper that option gets. So the buyer is actually losing money just by time going on. So every day that goes by, this is a daily chart, so each one of these bars is a day. And especially if I sell these close to the expiration date, they're losing money not by just price direction up or down, not by just having to cover the amount that they paid for the option, but also the option is priced differently than the stock, and the time left before that option expires reduces the price of the option, meaning now they got to be even more right. This thing's really got to crank down. And if I sell this option just a week or two out to expiration, that's when it exponentially has theta decay or time decay. And you put all that together and it's just an amazing strategy. But again, the key is, and this is where a lot of option traders miss out, is it all starts with the underlying chart, reading the underlying chart and timing these vertical spreads beautifully and perfectly, so that you're actually getting in at a time when, again, the odds are on your side. Again, go to webinar or indicatorwebinar.com, get my timing indicator, and this will help you tremendously. Also, by the way, please subscribe to the channel and you'll get notified when new videos come out.